Okay, we are now live. We're recording. Hello, everybody. Welcome to tonight's call. This is Tuesday, August the 8th, 2023. This is Triangle Blockchain Development. And tonight we have a special guest, Eric Moore, who's going to give us the latest updates and information that he has pertaining to Sears. And please remember, people, this is not financial advice. Okay, this is just information from his research, and by all means, invest and look at this and judge it from your own perspective, use your own judgment. Eric, we'll go ahead and get started when you are, if you're ready.
Okay, Blair, I'm ready. I'm going to put my mic in. If you need to reach me or send me a message, because I can't hear you unless I take the mic out.
Gotcha. You're fine right now. You can go ahead and roll.
Okay. Hey, everybody. How you doing? All right, this is going to be an update on Sears Holdings. Today is August 8th, 2023. All right, I'm going to be providing to everybody, including an image that Blair's going to pull up, and I'm going to let you hear, more importantly, before we do the image, I'm going to let you hear a short audio clip from the CEO of the real estate division of Transform Co., which is our company and the successor to Sears Holdings. So I've received a few emails after the Wind Down Trust put out their report. If everybody remembers, in the last video, in the last call that we did, which was in March, we did, I'm going to pull this up myself while I'm talking to you guys. We did an update, and at the time, the liquidating trust had not published their report. So I filed a motion to the court, alerting the court in the in the Sears Holdings case, alerting them that they were late publishing the report. So I'm going to explain. I explained in that video, so I want everybody, if you can, because I got maybe 10 emails or so maybe 10 to 15 emails when that report came out. And the report said that the recovery for the unsecured creditors was $0. Now, I addressed this in the previous video that's on the Triangle Blockchain Group website. I addressed that people would think that they were wiped out once they saw this report. But if you go to the motion, which is outlined very detailed, it's a very detailed outline of the motion. In the last video, I walked through all the sources of recovery. And I'm going to walk you through, after we play this short clip, I'm going to walk you through what a wind down trust is. I'm going to show you an example of a wind down trust, and I'm going to show you where the money is in these type of liquidations and these type of purchases out of bankruptcy. I'm going to give you a case study of a case in the JCPenney case and show you how they use different trusts to pay out the money. All right, so the good news, it's all good news. There's nothing wrong. And I want everybody to remember this. And these are three things that you must remember when you're dealing with Sears Holdings. If you're following the court record, you're wasting your time, because the court record is addressing the liquidation. And I want everybody to recall that there are two plans in this case. This is documented. I know that the anonymous people online are leading and guiding a large group of you, but there are two plans, and I'm going to give you the document numbers for both plans. The liquidating plan is document 3276. The reorganization plan is document 892. The wind down trust derives from the liquidation plan, which is document 3276. That particular document governs the liquidation of the parts of Sears Holdings that were not bought by Transform. We own equity in the assets of Transform Co., which you can go to the website and see. That is the entity that purchased Craftsman by Sears, Die Hard, Kenmore, Innovel Solutions, over 1,100 pieces of unencumbered real estate, the remaining 425 operating stores at the time, the inventory, Sears Puerto Rico, the land, over 5,000 acres of land, over 1,100 pieces of unencumbered real estate. That is the entity that pays us. That entity is called Transform Co. They have a website. They still own Kenmore. We sold Die Hard and some other assets and some of the real estate. So Scott Carr is the CEO of the real estate division of Transform. This is the entity that will be paying us out. The wind down trust and the wind down trustee are only dispersing the remaining assets that were not sold. It could be some litigation claims in there, money coming from Visa and MasterCard, refunds, some other minor things of that nature. The net operating losses and the tax credits, all of that is at Transform. So Scott Carr recently did an interview on a podcast, and he talked about how much money was brought in from some of these unencumbered properties that I've been talking about for 3 years. People online, and I don't know how many times I have to disprove the people online, but at a certain point, I don't know how long it will take, but at a certain point, I think everybody will realize that everything that I'm disseminating, everything that I'm discussing and talking about, this is not how Eric feels. These are not Eric's thoughts, Eric's conjectures. These are things that are documented from the source. They're either coming from the court record, they're coming from a court order, or they're coming from an official source. So this is the official source. His name is Scott Carr. He is the head of the real estate division of Transform, and he's going to discuss how much money has been brought into our company from the sale of the real estate that everybody said was worthless, everybody said didn't have any value. He's going to discuss roughly how much money has been brought in so far in this interview he did about a couple of months ago. So Blair's going to cue up the clip, and Blair's going to play this clip for you. This is Scott Carr being interviewed in a podcast. Now, if you want to see the full interview, which is important because he talks about what they're doing with mall real estate and the parking lots, etc., it's going to be on the Triangle Blockchain website. It's probably on there now. But he's going to play a short 3-minute clip, and I want you to listen to the numbers and tell me if these numbers are not what I've been saying for the last 3 years. Now, this is our company, and this is the real estate that has been sold, and this is a report from the guy in charge of the real estate division, Scott Carr. This is not Eric. This is from the source of Transform. He runs the real estate division, and Blair's going to cue that up and play it for you right now.
Everything we've accomplished.
So Shauna was just talking about some of the successes that you guys have had in these wins. Can you tell us a little bit about what that success has looked like?
Yeah, that's a great question. And really getting the message out there that Transform Co. is getting business done. I know when I joined, the perception was, is this going to work? Are you committing capital to move things forward? Can we deal reasonably with what used to be a department store mentality and is becoming a real estate mentality? And I think the results speak for themselves. Yes, you can. We've sold 182 assets since inception for $1.2 billion in proceeds. We've done to date 40 long-term leases with various retailers, and I think the key element being is those are repeat transactions. So we're able to sit down with a retailer, negotiate a form lease, and then open those 5, 6, 10 locations nationwide. And that's something that was a very early on goal for us, which is now repeating itself over and over and expanding, driving our business. We've been very active in the capital markets. We've done 7 financings, raising over $304 million to fund our business. So we are here committing capital, both in equity and debt. And then, as I mentioned earlier, the acquisitions we've had for redevelopment and branching into other asset classes with our multifamily development. And on the horizon, we're working on our first industrial deal and our first self-storage deal. So we are, really proud of what we've done, but we realize we have a lot more to do. And that's the opportunity that we're so excited about and looking forward to.
Well, Scott, that's been amazing. Shauna, thank you for joining us. And Scott, thank you so much for being here and telling us about Transform Co.
Thank you. Appreciate it.
Thank you.
Bye-bye.
Okay, thank you, Blair. Okay, so as everyone heard, he said that they sold roughly 100, I think he said 82 assets for 1.2 billion in cash. I want everybody to remember uh, there was there were 3.9 billion in unencumbered assets that were secured by the loan of 350 million. Remember, there was 3.9 billion according to the court record. It's document 2886. Document 2886 is a transcript in which they confirmed that the unencumbered assets that were securing a loan of 350 million that transformed, that the debtor in possession loan, the junior dip is what they call it. The loan was 350 million. The unencumbered assets were worth at least 3.9 billion. So those 3.9 billion in assets were securing that 350 million. He just announced that 1.2 billion in cash came in, and they have 40 leases from other tenants. If you take 1.2 billion and deduct it from 350 million, we know that the loan is paid off. But don't forget, we also sold Innovel Solutions, and you can Google this. I've covered this in other videos. We sold Innovel Solutions to Costco. You can Google this on your own for $1 billion. We sold Die Hard for $200 million. So if we just take the publicly available numbers, remember that was 350 million owed. Let's take what came in according to the official sources. 1 billion from Innovel Solutions, 200 million from Die Hard, and 1.2 billion in cash from the sale of some of the real estate. That's $2.4 billion and a debt of $350 million. That does not sound like a company that's in financial trouble to me. The company was debt-free as of March 17, 2020. That is confirmed in a press release on the Transform Co. website. On the Transform Co. website on March 17, 2020, you can go to the press releases and you will click. They announced that Innovel Solutions was sold, and they said that the company was debt-free with the exception of a small amount of real estate debt. That real estate debt was a total of $175 million against assets that were valued at a minimum of $1.075 billion. So if we take a look at the assets and the liabilities, which is all that matters when it comes to business and investing, it's assets minus liabilities. It's not what Wyco Researcher or Elephant Analytics or some of these people online are discussing or talking about. It's assets minus liabilities. It's not about conjecture. It's not about hypotheticals. It's not about what people think is going on. It's simply about assets and liabilities. That's it. Now, the challenge that most people are having right now is that they're able to find anything that they think is negative, but math is not negative or positive, no pun intended. So let's do the numbers again. It is documented that in February 2019, that the assets left the bankruptcy. So that is why I'm not following the court record. I'm not looking at motions filed with the court. I'm not participating in any conversations online. I'm only interested in people who want to discuss the assets and the liabilities. I don't want to discuss personal stuff. I don't want to discuss whether they think I'm a great investor, a bad investor, a good investor, et cetera, et cetera. It's irrelevant. I don't want to discuss what's in the wind down trust, because the wind down trust is not where we get paid out of. We get paid from Transform. The documented numbers that you all can Google on your own are 1 billion for the sale of Innovel Solutions, 200 million for the sale of Die Hard, and you just heard Scott Carr say 1.2 billion in cash was brought in from real estate sales. I don't know how much the 40 leases were, but we know that's money as well. So we have 2.4 billion against 350 million in debt. That does not sound like a company in financial trouble. Does not sound like a company in financial distress. Sounds like a company that's doing amazing. We have roughly 22 stores that are still operating. We still have the online business, which we don't know the numbers. We still have the 22 stores that are open, which we don't know the numbers. So I don't speculate or assume or guess. What we do know is that $2.4 billion has come into our company, and the debt at the time of the bankruptcy was no more than $350 million, not counting some secured debt with some of the inventory. So there is no way that the company is in any financial trouble whatsoever, because we have not added up what the online business did for the last 3 years. We've not added up what the leases have, because we don't know this information, but we know it's all extra money. We know we have the NOLs and tax credits, which I've discussed in other videos. We know we have tax refunds, et cetera, et cetera. I don't even want to estimate what the number is, but I know the number is in excess of $7 billion in cash. I know that. I could show you 2.4 billion that you can publicly find. And 2.4 billion minus 350 million is a lot. It's a lot of money. Not to mention, we have the tax credits. We still own Kenmore. We still own, what's the other company? We still own the online business, and we still own Craftsman by Sears, and we still have maybe 300 to 400 more properties, and probably 5 to 5,500 acres of land. So what Blair's going to pull up for you now is I'm going to show you a case study from another case on how trusts work and how liquidating trusts work in a bankruptcy case. It's going to be very short, less than 5 minutes. So Blair's going to pull an image up for you right now, and I'm going to explain to you what a liquidating trust is and what they do. All right, so the image is up right now. If you take a look at the left, on your far left, now this image is from the JCPenney bankruptcy case, okay? We're not discussing the JCPenney bankruptcy case on this call. We're just using this as an example so I can explain to people what a wind down trust is. You can Google, what is a wind down trust? What is a wind down liquidating trust in a bankruptcy? But this is from a motion filed with the court in the JCPenney case. If you can see in the middle page, they say debtors. On the far left side, on my far left, you see PropCo. And you see at the very top, it says First Lien Minority Group Bidder. And they have a $1 billion number up there. All right. If you look at the far right, you'll see something that says OpCo. And this was the operating company that was purchased out of bankruptcy by Brookfield and by Simon Grove Properties. If you see the numbers there, it's 500 million for the take back debt and 500 million in cash. The middle square below the square that says debtors is the wind down trust. So the purchasers create these trusts. So the people who purchased the bankruptcy, purchased the real estate out of the JCPenney bankruptcy are on the far left, and it says PropCo. It says 160 properties. It says, I think it says 8 distribution centers. I can't read it very well, but you see on the far left where you see the dotted line. That was $1 billion that was distributed out of that trust. If you go to the far right, that particular trust was created by Simon Grove Properties and Brookfield, who are the 2 largest mall-owned companies. They bought JCPenney's operating company, the actual stores that were operating, out of bankruptcy. They dispersed $1 billion out of that trust. In the middle is what's remaining at the bankruptcy that was not purchased. That is the wind down trust for the JCPenney bankruptcy. So they got litigation claims. They got some reserves from their credit card that was out because Synchrony was doing their credit card. They've got some other money coming in from a credit card settlement that was done with Target and some other major retailers. That particular trust has between $30 and $50 million in it. And the JCPenney bankruptcy effective date was sometime in 2020 or 21. So they've got $30 to $50 million left. The people on the far left and the far right in this chart are not freaking out. They were paid out of the trust of the purchasers. So in the Sears Holdings case, everybody, in the Sears Holdings case, we're getting paid out exactly the same way by the purchaser. The purchaser was ESL/Transform. We are not counting on the money in the middle square to be enough to pay us, because that is the wind down money. That is what's left over that was not purchased. So what's left over and not purchased in the Sears Holdings case is simply 80 to 90 million. I said it was roughly that amount of money in the video in March, before the wind down trust report came out. In my motion to the court, I listed more than 6 different sources of our payout. All of those sources will have different trusts, just like here, or they'll all be put into 1 or 2 or 3 different trusts. Those trusts will pay the bondholders and the shareholders. There's nobody else left to pay. In this particular case, the first lien bondholders foreclosed on the company, so they were the only people to get paid because they were the only people that were beneficiaries of the trust. We are beneficiaries of the trust. This is documented, document 1436. I don't have the page number in front of me, but I may have it over here. And I went over this in previous videos. Let me see if it's right here close by. If it is, I'm going to read it off the actual document where we are the beneficiaries. I think it is. I don't know if I have it close by. Hold on, everybody. Give me a second. Don't have it close by. I saw it recently, but it's in document 1436. If you search that document and look up express beneficiary, it will say that the estate, the bankruptcy estate of Sears Holdings, is the beneficiary of the assets that were secured by the junior dip, which was the $350 million loan. So what that means is Transform's assets belong to us once all debt is paid. As of March 17, 2020, the debt of Transform was paid. All revenue that has come in since then, all asset sales, including what Scott Carr, the head of the real estate division, just told you, was 1.2 billion. Innovel Solutions was $1 billion. DieHard was 200 million. We know that $2.4 billion has come into our company, and we know that the loan was 350 million. That's almost 10 times the amount to pay off the loan. That does not count all of the money that came in on year one from the stores that were operating profitably and the stores that closed profitably. 95% of the stores that Transform closed and liquidated at a profit. This is documented in the second lien appeal and in those particular documents. I estimate low numbers that there's at least 7 billion in cash based on documents in the second lien appeal. And remember, the appeal was for the roughly about the valuation of the inventory. So 1.657 billion in inventory went to Transform. If we sold it at cost, we end up with 1.657. We know we sold it at a profit because those stores were open for more than a year. But let's just assume, for argument's sake, that it was sold at cost. So you add 1.657 billion, and all this is documented. So I'm assuming no profit was made. The documented profit is 30%. The credit card has been making between 2 and 300 million a year for the last more than 10 years. I did not count that money as well. So long story short, let's add 1.657 billion to the 2.4 billion number. You end up with $4 billion in cash. Eddie Lampert is one of the greatest investors of all time. He has investment authority over this cash. He can invest this money. He can buy another company with this money. He can use this money to purchase stock, to buy more bonds. He can do all kinds of things. So the focus has to be on 3 main things in order for you to keep your sanity while you wait. This is value investing. This is not trading. This is not gambling, guessing, or speculating. You must focus on the assets and liabilities of the company, and you must make sure you don't let somebody redirect you and have you focused on the middle square when the middle square does not pay us out. The majority of the money in the JCPenney case and in 99% of bankruptcies, it's not in the wind down trust. It's in the other trust of the purchasers of the assets out of bankruptcy. A wind down trust is simply the residual left over from what was not purchased. Sometimes it's 5 or 6 properties nobody wanted, or maybe 7 or 8 properties. Maybe it's some old statue. I think we had a statue that was sold for a few $1,000,000. Long story short, the liquidating trust is one of 3 to 4 or 5 different trusts that pay us out. In the JCPenney case, as you can see in front, more than $2 billion was paid out thus far from the other trust. You do not look for the wind down trust to be where you get paid unless there's an agreement to put that money in the wind down and then pay us. So when you see a report that the wind down trust does not have but 100 million and we're owed all this money, blah, 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 you simply ignore it. I explained this in the court motion, and I also explained this in the previous video. The last 12 minutes of the last video, I want everybody to please watch it and take notes, because when that report came out, I got emails that were literally verbatim answered in the previous video. So I know most people think that we have to do an update every week, every month, or every 2 months. But the only new information that we're waiting on is a merger and a payout announcement. There's nothing to follow in the court record because those are not our assets. Nothing happening in the bankruptcy has anything to do with us. Nothing. Our assets are at Transformco. You can follow the website. Generally speaking, these type of mergers happen with an entity that is controlled by the largest shareholder. So it appears that we're going to probably merge with Seritage, which is SRG, or AutoNation, stock symbol AN, or Lands End, stock symbol LE. I don't know if that's going to be the case, but most likely we're going to merge or acquire one of those companies, go public, and get paid out. Eddie Lampert is an incredible person with incredible integrity. He is not delaying paying us or himself. If he is taking this much time, I promise you it benefits us. If you are impatient and you are looking at this as a lottery ticket, like the Powerball or Mega Millions or whatever is going on tonight, you will lose your money in the end. I suggest everybody get the book, The Intelligent Investor by Benjamin Graham, and read chapters 8 and chapter 20. If you don't increase your financial literacy, and I don't recommend any person online that I have seen, especially nobody that's popular online talking about stocks. 99% of them don't have a clue, or they're running a scam. So do not go there looking for this information. If you want to be a trader, you want to speculate and gamble, you're going to lose your money. If you think this is a lottery ticket and you're waiting to get paid, and you're not looking at the ongoing opportunity that exists with the bonds, because the bonds have went down in price back to where they were originally when we were buying them for $12 or $15 a piece. The bonds are worth more than $1,000 a piece based on the numbers I just gave you. I bought some today for $12 each. $12 each. If you are not still buying, you don't understand this opportunity, because there is nobody here that can tell me that if you could buy something worth $1,000, you wouldn't pay $12 for it. You would buy as much of it as you could, as long as you could. I don't know when the merger is going to happen. There's speculation happening everywhere. It's completely irrelevant to me. As long as the opportunity exists, I'm going to continue to buy. If you are unaware or you think it's going to be a long time from now, you open a retirement account and you buy the bonds and you put them there. You can't think about tomorrow. You have to think about next year, the next 5 and 10 and 15 years. These type of opportunities are so rare that you have to capitalize in a major way when they come about. Some of you were the beneficiary of my research in the company, Mr. Cooper, the mortgage company. The stock symbol is COOP, C-O-O-P. I sent out an email March of 2020. The stock was trading for $6. The assets, meaning the book value, was listed at $22. The price to earnings was a 1. They were earning more than $6 a share per year. That's the equivalent of owning $1 million house that's paying you $1 million a year in rent. That's how incredible Mr. Cooper was. I was under the impression that everybody who got that email loaded up while we're waiting on Sears. Today, that stock is roughly $60 a share. The book value is a little bit higher, and it's been less than 3 years. That's 10 times your money in less than 3 years. That does not happen by happenstance. It happens because you're literally buying something worth a lot more than what you're paying for. You're not looking at the stock price and hoping that it goes up. You're looking at the assets of the company and the liabilities of the company, which is called the book value. And if the book value of the company and the stock is selling for $300, you're overpaying by $250. So the book value, you're looking to buy for at least 50% of the book value. If it's not 50% of the book value, you don't even want to do any more research because you're looking for quality at a discount. If you have not adopted value investing, it's going to be very difficult to wait. Sears Holdings could be announced tomorrow. It could be another month, another 6 months, another year, another 2 years. If you have grandchildren, if you have children, if you have a retirement account, my suggestion would be to simply purchase in your retirement account going forward. If you're too old and already have a retirement account, I would put it in college funds. If you can get Wayne or whoever to open up an account with you at E-Trade, don't ask those questions on this call. You open up those accounts and you buy the bonds in those accounts. We must get our thinking beyond next week and beyond lottery mentality. It's going to take a little reading and some studying to be at peace with the time period. The book you need is by Benjamin Graham. It's called The Intelligent Investor. You only need to read chapter 8 and chapter 20, but you need to master those chapters. There is so much information about Sears Holdings. I've written 15 articles about Sears Holdings. We have more than 8 videos online. There is nothing I have not covered in Sears Holdings. I won't be doing updates, but maybe every 3 months, every 6 months, maybe. There's literally nothing to update. The only thing we're doing now is we're still buying and we're waiting. That is what value investing is. If you want to follow the anonymous people online and let them redirect you and let you focus on the middle square instead of the squares that are paying out the money. Some of you don't believe you deserve a great opportunity like this. I can't change that. Some of you have planned to blow your money and it hasn't paid you yet. That has nothing to do with me. I won't be answering emails and I won't be responding to people who are asking me time frame questions because I have no idea. I'm thankful to have found this great opportunity. I'm thankful to have brought a large group of people along with me, but I will be sad if people don't get their financial literacy to a PhD level. Because if you think you won't blow this money or be tricked out of it or conned out of it by buying other investments, throwing your money at any company that says they got AI behind it, I promise you, you will lose this money if you do not get your financial literacy up. Inflation is at an all-time high, but there are incredible opportunities going on right now in the stock market. And Sears Holdings is the best I've ever seen, but it's not the only thing that I work on. There's nothing to work on with Sears. I don't follow the court record. I don't suggest anybody else follow the court record. I have not had a decent discussion on Seeking Alpha in 3 years. I have not been on Seeking Alpha in 2 years. So what I'm hoping everyone can do is go back through the last 2 videos and ask questions related to the assets and liabilities of the company. Make sure that you're not following what other people are guiding you, especially if they're not giving you documentation in context. So if I were to tell the people from JCPenney, hey guys, it's only $40 million left in the liquidating trust, they would laugh at me because the other trusts have paid out more than $2 billion. This is the only case where we have people sending out this type of misinformation. People in the JCPenney case can simply go to this document and they know how crazy it sounds that all the money in the wind down trust is the only money that's going to be paid out. So There are people who benefit from the bonds being a very low price. There are people who benefit if the stock were to be wiped out. It is mathematically impossible to wipe out the stock when the assets exceed the liabilities. The surplus goes to the shareholders. Eddie Lampert has invested more money than any of us. He has more than $2 billion invested. He did not wipe himself out. He's an incredible guy with incredible integrity, and he has a plan that is absolutely amazing. And if it's taking this long, I assure you that the time period that it's taking benefits us. So for us to capitalize is for us to focus on trying to make this opportunity as big as we can. So I think that's it, Blair, and I think I can take some questions, but I want to make sure everybody does not focus on the price of the bonds. Tomorrow, the bonds could drop up 10 times where they are now. So what? That doesn't mean anything. There's so little legitimate information about Sears Holdings out there. And when you're in an amazing investment, you're not going to be in a crowd of people who understand it. There's going to be a very small group of people who understand that investment. And in this case, just like the Big Short, maybe 6 or 8 people capitalized on the Big Short. There's no crowd of people who were online saying we're buying credit default swaps like they did in the Big Short movie and getting rich. There was no crowd. The crowd was thinking that the market was doing great. The minority made the fortune. The people who bought Amazon as a penny stock after the dot-com crash, the very small group of people, mainly Amazon, Jeff Bezos. There is no crowd of people who benefited from Berkshire Hathaway. There's no crowd of people who bought Geico at the bottom, except for Warren Buffett. There's no crowd. The great investments don't have a crowd. So you have to make sure you're focused on the assets and the liabilities and the math. Anything other than that is irrelevant. If you're focusing on something else, I assure you, you're going to get nervous. You're going to look at the price. I think I'm losing money. My account shows a negative. It's assets and liabilities. And if you get a chance to buy something for $12 that's worth $1,000, you probably should buy as much of it as you can. And don't think of it as a lottery ticket. It's a business that you own that's going to pay you out some cash and going to pay you out of stock. I have no idea when it's going to be. But as long as the opportunity exists, I'm going to keep buying. I'm done, Blair.
All righty, I'm going to pause it and let this segment be the segment for the presentation, and then we'll record it again, and we'll have the Q&A session with everybody, all right?
Okay, we can record the Q&A too.
Yeah.
Okay.
All right, hold on one second.